Howdy. In this video, we will cover an introduction to assets. We are starting again with the accounting equation. We'll always anchor here. Assets equal liabilities plus shareholders' equity. In this video, we'll take a closer look at assets. Assets are typically thought of as a good thing for the company. The technical definition of an asset is a probable future economic benefit. Each word of this definition is important. Let's start at the end with economic benefit. That's why we think of an asset as a good thing, because it is something that can turn into an economic benefit for the company. We will investigate that more in this video. In the next video, we will look at the word future in more depth. And probable we can clear up here. In order for something to be an asset, we have to be fairly certain it is going to provide the company with a future economic benefit. Let's dig deeper into the phrase economic benefit by looking at some examples of assets and the economic benefit they provide the company. Here we have a list of assets. Don't try to write down everything that I have here now. I'll have some blanks for you to fill in the note packet. First, I want you to note that assets are found on the balance sheet. So if you're looking at a set of financial statements, all of the financial statements, the balance sheet is where you would want to look to see the company's assets. Assets are always listed on the balance sheet, with current assets first, followed by long-term assets. Current assets are assets we will use within 1 year. Long-term assets are assets we will use or hold longer than 1 year. On this list, we can see some examples of assets. First, we have cash. Cash is easy. That's just money in the bank. So go ahead and fill in money in the bank. It's also anything that's easily convertible to money in the bank. So oftentimes you'll see this listed as cash and cash equivalents. So it could be something like a money market fund that could easily be converted over into cash that you can spend. The economic benefit for cash is that we can reinvest it in the company. Before we go through the rest of these assets in more detail, I want you to note that current assets are listed in the order of liquidity. Liquidity is how quickly an asset can be converted to cash. So here we see cash listed first, since it's already cash, so we can access it really quickly. And then we go down to accounts receivable, which hopefully will turn into cash fairly quickly. And then we go down to inventory. Inventory is further down the list of current assets because it is less liquid, meaning it takes more time to sell inventory and turn it into cash to actually get the cash from that sale. So that makes inventory less liquid than some of the other assets that we have listed before it. Let's look into each of these assets further and their future economic benefit. We already went over cash. These other assets we'll look at in more detail on their own slides. So you can continue to fill in this chart with the information that we have on the next slides. Accounts receivable represents cash we are owed by our customers. At times, we may want to sell goods or services to our customers, but not require them to pay cash immediately. We call this sales on credit. So when we sell to a customer on credit, it means that we're not making them pay immediately. We want to track what our customer owes us because it is not cash yet, but it could turn into cash soon. It should turn into cash soon. So we need to show that as a probable economic benefit the company will realize in the future. And the economic benefit is that eventually it's going to turn into cash that we can use to reinvest in the company. But it's not cash yet, so we need to have it as a separate account where we're tracking how much our customers owe us. Another thing to note with accounts receivable, which we'll talk about in more detail when we look at the income statement and net income, is that just because we sell something, just because we recognize revenue, doesn't mean that we immediately receive the cash for that sale. So sales or revenue on our income statement is not the same thing as cash because of this accounts receivable piece. Again, we'll dive into that in more detail. Just make a mental note of that for now. Next, we have inventory. Inventory is the goods we plan to sell in the future. A company could make these goods. For example, Nike makes their own tennis shoes. They buy rubber and fabric and create those tennis shoes. The rubber and fabric, before it gets made into a shoe, are raw materials. Raw materials are included in inventory, as are partially completed shoes, called work in progress, and fully completed shoes, called finished goods. Alternatively, other companies may not make their own products. Think of a company like Academy, the sporting goods store. They don't make goods themselves, but they buy goods from companies like Nike to sell in their store. Once Academy buys a shoe from Nike, the shoes become Academy's inventory. It is a good Academy plans to sell in the future. So again, whether you're Nike and you make shoes yourself or Academy and you buy them from Nike, if you have those goods in your possession and plan to sell them in the future, that's your inventory. Inventory provides us with an economic benefit because eventually we're going to sell that inventory. So that inventory turns into sales, which may temporarily be accounts receivable, or we may immediately receive that in cash. So eventually that sale is going to turn into cash, which again we can reinvest in our company. So all of that is an economic benefit. But right now, that inventory is an asset that we're holding in anticipation for that future economic benefit that it will provide. Let's go back to the long-term asset briefly that we have listed here as an example. The example we use here for a long-term asset is a building. A building is a facility your company uses to make or sell things. So it could be a factory that Apple uses to make an iPhone, or it could be an Apple store that Apple uses to sell an iPhone and their other devices. The economic benefit of a building is that we're using it to operate our business. So we're making or selling goods or services. So eventually that building is going to provide us with sales, which eventually will turn into cash. So when we think about this economic benefit column, it really is the same for every asset. It's that eventually these assets are going to turn into cash, which we can reinvest in the company. As we go through the videos on assets, we will look more closely at that word future that comes in this asset definition.